Hello everyone and welcome to the July public live stream Q&A. This is Andreas Antonopoulos. I'll be answering the questions that you've been posing over the past week. For those of you who are Patreon subscribers and have been supporting me on a monthly basis, thank you so much to all of my community builders on Patreon and other platforms. Also, those of you who are YouTube members, you get two nice perks. One of them is that you get to showcase some really cool emoji, and this is your hint, your cue for the emoji storm. Go emoji storm. Show everyone the custom emojis. But another nice perk you get is you get to access the Q&A platform 30 minutes before we start, so you can vote and comment. For those of you who just joined, you can also vote on questions and perhaps ask a question if you don't see it asked already. And you'll see the Slido code in just a second when we go to our very first question of this session. Now, remember, it is always better to vote, not ask another question, because at this point we already have a lot of questions, and if there's a question that's close enough to what you want to ask, if you ask it again in slightly better wording, you end up splitting the votes and almost guaranteeing that neither your question nor the other question will get answered. So it's actually better to vote up one that's close enough to what you want to ask than to ask a completely new question all over again. Did you notice the pizza mug? This is a Bitcoin pizza. If you don't know, Bitcoin pizza is a pizza day in May when we celebrate the very first commercial transaction executed with Bitcoin in 2010, when Laszlo Haniek bought 2 pizzas for 10,000 Bitcoin. And that is commemorated by our special Bitcoin pizza emoji, which we also put on a mug. I just love this. It's completely pointless, very, very silly, and lots of fun. So cheers to you. All right, we can jump right in and go to our first question of the day. And if you haven't noticed, right up there is the Slido code. You can use this Slido code in order to log in. Slido.com, enter the code aantonop725 and go and vote for questions now. Tomer asks, what is your opinion on Ethereum plans around proof of stake? What potential use cases might it unlock, and how would it affect Ether and Bitcoin relationship? So, Tomer, that's a great question. As you probably know, we are in the final stretch for the launch of Ethereum 2.0, which includes a proof of stake mechanism for Ethereum. Now, what's going to happen next? Nobody really knows. It may get delayed again. Unfortunately, these are very complex and difficult projects, but I do hear a lot of confidence that it will actually get deployed in the next few months, and we will have Ethereum under a proof of stake system. Now, what's interesting about this deployment is that Ethereum will be by far the largest implementation of proof of stake, and also not just in terms of users or in terms of market capitalization, but in terms of active transactions and the funds that are being protected by the smart contracts that are being protected by the proof of stake system. So this is a real test. These systems can't be tested on paper. They have to be tested in real world environments, in adversarial conditions, with real money on the table. And that's the only way you can test these things. So this is a very, very big test for proof of stake consensus. And hopefully we will all learn many useful things that, maybe one day we might even see applied to other chains. How does it affect the relationship between Ethereum and Bitcoin? I don't think it really changes. The thing about a consensus algorithm is if it's working correctly, it doesn't really matter how it works to most of the users, and it's invisible, just like internet routing doesn't really matter as long as it's working. What it will do, however, is it will change the landscape a bit of the proof of work infrastructure based on GPU. Now think about it this way. Right now there are really two different proof of work infrastructures in the world. There's Bitcoin's proof of work, which is based on SHA-256, and because that has become enormously profitable and competitive, ASICs have emerged for that. The other proof of work systems have not had, for the most part, ASIC development, which means that everything else is mined on GPU. And in that market for GPU mining, Ethereum dominates. And what happens when Ethereum switches to proof of stake? Well, one thing that happens is that it frees up a lot of GPU miners. Now, what are those miners going to do? Probably switch to mining other systems. Maybe they'll mine Monero. Maybe they'll mine Zcash. Maybe they'll mine Litecoin. Maybe they'll mine something else. Who knows? So it is going to affect the other proof of work coins that are not ASIC based. And that's going to be interesting to watch. All right, let me just quickly check in the chat. See if everybody is hearing me well, if everything is going well. Oh, people seem to be enjoying themselves. Did we actually have the emoji storm? Yes, okay, very satisfying. That is a proper emoji storm. Excellent. Very good. Let's go to our next question. Anonymous asks, do you think it's important for more people to run non-pruned nodes, or are there enough copies of the ledger already? Anonymous, honestly, no, I don't think it's important for more people to run non-pruned nodes. The big problem we have is that we don't have enough nodes that are validating, let alone enough nodes that have a full archival copy of the entire Bitcoin blockchain. So if more people can run validating nodes, for example, on Raspberry Pis with small SSD drives or small hard disks in general, if people can run pruned nodes at home, maybe even on their laptop, that increases the number of nodes that are doing validation, propagating transactions and blocks, which makes the network much more difficult to censor. And that's very, very good for Bitcoin. So in the big picture, running a pruned node, if that allows you to run a node when a non-pruned node, a full archival node at 350 gigs would have been too much, running a pruned node where you can keep it down to, maybe just a few gigs, then you are already contributing to the network through validation. So what we need is more nodes. And if pruning allows us to run more nodes, that's great. There will always be those who, for a variety of reasons, including business reasons, like myself, want to and need to and can afford to run full archival nodes. And I do so, several in fact. And there are enough. There are enough in enough places, enough copies of the blockchain that pruning isn't a problem. Anonymous asks, I know Bitcoin transactions aren't anonymous, so why are they considered more secure and private than fiat? Well, it depends here, Anonymous, if you're talking about fiat cash or fiat through the banking system, essentially digital fiat. We see through credit cards, debit cards, and the banking infrastructure. So why are Bitcoin transactions more secure and private than digital fiat? Because digital fiat is one giant surveillance panopticon. Every single financial transaction you do is reported, analyzed, correlated, and sold to the highest bidder, and it's monitored by a variety of intelligence agencies through data sharing agreements, and accessible to law enforcement on a very, very, very low standard, and of course accessible to intelligence agencies on no standard of privacy whatsoever. So your financial transactions are not private at all if you use digital money through your bank account, through your credit card, through your debit card. In fact, it is probably one of the largest surveillance networks in the world and provides very, very, very useful metadata to those who want to violate the privacy of people. So Bitcoin, even though it's not anonymous, being pseudonymous is more private than that, of course, because your financial transactions are not anonymous at all. They're directly connected to your ID. Why is it more secure? Well, that's a whole other thing, but of course the biggest issue is that intermediaries can't censor you, freeze your money, seize your money, etc. With Bitcoin, you control your own keys, therefore you control your own coins, and that's a very big deal. Now, is it more secure and private than cash? That's an interesting question. It's not more private than cash, it's less private than cash. But cash has many drawbacks. One of them is that you can only physically exchange cash in person, you can't email it across the planet. The other one, of course, is that you can't carry it around in quantity because it's not very portable. And finally, the third one, and this is a big one, is that it's actually difficult to validate that the cash that you are receiving is real. Forgeability is a big issue. Cash is actually easy to forge. And, you know, we all think, oh, we would be able to tell a forgery. No, you wouldn't. You wouldn't be able to tell a forgery. I can guarantee you that, first of all, because I've seen forgeries and I couldn't tell. But secondly, because even the Secret Service has found forgeries of such incredible quality, usually done by nation states, where it is impossible to tell the forged from the real without very, very extensive forensic analysis. So forgery is a problem. So in terms of security, if you consider crypto, because of its unforgeability characteristics, it's more secure than cash. All right, we currently have 250 people on the live stream, and I'm pleased to announce that after 5 different live streams where I've tried to get this damn button on my stream deck to show me how many people are on live, it is now showing how many people are on live. It is showing it in such a tiny font that I not only would need to put on my glasses, I would probably need to add binoculars on top of my glasses in order to see this. But it is there. I know it's there. So it worked, finally. All right, let's go to our next question here. You know what, I'm going to take a quick little break and then I'll go to our next question. Hang on a second. Let me remind you of the moderation policy while I drink some coffee. And we're back. Our next question comes from Anonymous. What kinds of cryptography is used in Bitcoin and where else is it used? Well, there's 2 cryptographic primitives that are used primarily in Bitcoin. The first one is elliptic curve digital signatures, ECDSA, the elliptic curve digital signature algorithm. And the second is a cryptographic primitive that isn't cryptography per se. It is hashing, and that's the SHA-256 hash algorithm. So where are these used? Elliptic curve digital signatures are used everywhere. Pretty much all software signatures that are used to authenticate that the piece of software you got actually comes from where you think you got it. That's elliptic curve. Some website SSL uses elliptic curve. A lot of it also uses RSA, which is a similar system of digital signature, just not elliptic curve based. And it's also used in a variety of very, very high security communications and authentication systems, military communications and military authentication systems. So if you're wondering how the nuclear codes are secured, that's going to be this kind of cryptography. And all kinds of secrets in private and public organizations and institutions are protected with this type of elliptic curve cryptography. Now, not all systems use the same curve, and Bitcoin uses a rather unique curve, which is the 256K1 curve, which is a NIST standard. Now, not many other systems, in fact, I don't know of a single other system that uses that specific curve, but its properties are considered to be very, very secure. And while other systems may use other curves, for example, Apple uses a curve called, if I remember correctly, ED2559 or something like that, and there are other curves in use, the underlying mathematics are more or less equivalent. SHA-256, the hash algorithm, again, that is the standard. So the current SHA-256 has been replaced by the SHA-3 cryptographic hash algorithm under the NIST standards, but SHA-256 is still very, very broadly used throughout many computer systems. It is considered very secure. There have been no successful efforts to break it meaning create collisions or pre-image attacks on SHA-256. SHA-3 is considered more secure than SHA-256, and it is considered the successor to SHA-256, but there's no reason to replace SHA-256 anytime soon. So that's the cryptography that's being used. All right, our next question comes from Anonymous again. Anonymous, you're asking some really great questions. Of course, that depends if you're the same Anonymous as the previous two Anonymouses, or if you're a different Anonymous who is pretending to be the other two Anonymouses, or the other one Anonymous who asked two questions. It's very confusing. What implementation of Lightning node do you recommend running? Is it safe to run Lightning wallets based on Neutrino? Asks Anonymous. Well, the implementation of Lightning nodes that you run will depend on a variety of things. You don't need to run a Lightning node in order to have a Lightning wallet, but as with Bitcoin, if you run your own node, you gain several advantages because you become authoritative in terms of validating the information that you're receiving, and also you have much more control and much more privacy. So it is recommended to run a Lightning node if you can. Now, which one? There are really three popular ones at the moment. Those are LND, the Lightning Network Daemon by Lightning Labs, C Lightning, which is an implementation in C by Blockstream, and Eclair, which is French for Lightning, by Async, which is an implementation in Scala. So three different programming languages there. LND is written in Go, which is a Google language. C Lightning is written in C and has a plugin system that can support different languages, such as Python. And Eclair is written in Scala, which compiles down to Java bytecode. Because you will end up spending a lot of time in the command line, and when you're in the command line using the build tools, frameworks, and libraries for that language, you might find yourself in sticky situations with dependencies, with version control, and things like that, where you might get a bit lost. One of the strong recommendations I have is work in an environment where you are comfortable. So if you are familiar with the build system used with Go and the programming language Go, then you would naturally choose LND. If you are familiar with C programming and the GNU build system, then use C Lightning. And if you're familiar with Java programming and Scala programming and familiar with the Maven and Java build system, then use Eclair. Personally, I'm most familiar, I'm a native, if you like, in the GNU build system toolset and the C programming language. I'm also very familiar with Python, so C Lightning is a very good fit for my needs, but your mileage may vary. And I also run LND and Eclair nodes, and I tried to dabble in their code base as well. Is it safe to run them based on Neutrino? Neutrino is a lightweight mechanism so that you can connect to the Bitcoin blockchain without running a full Bitcoin node. It's a bit like simple payment verification or SPV wallets, and it allows you to run a Lightning node without having a full Bitcoin node. And is it safe? It's still early days, so we don't know, I think is the best answer I can give you. There's no reason to believe it's not safe. But then again, the bigger question is it safe to put a lot of money into the Lightning network and on your node? And the answer to that is no, it's not safe. In fact, it's a meme. It's reckless. And so doing the reckless thing in order to push forward the innovation and the forefront of this technology is something that not many people are willing to do. But if you're reckless enough to run a Lightning node, running it over Neutrino isn't significantly more reckless. I would say it's about the same. And therefore, if that's going to encourage you to run a node that you would otherwise not run because you don't have access to Bitcoin, a full Bitcoin node that's synced to the blockchain, then by all means, run Neutrino. I don't think it increases your risk much more, and that's because your risk was already high. Lightning nodes are hot wallets in a cutting-edge technology that very certainly has bugs. So you're already reckless. Why do some people think crypto is so scary? What is an example to use for explanations that it isn't scary, asks Bjorn. Well, it might have something to do with the fact that I answered the previous question by saying that running some of this infrastructure is reckless. It might have something to do with the fact that this is not mature technology. It doesn't have polished user interfaces. It requires a very, very significant learning curve in order to understand this technology and apply it successfully and securely in your life. And it's also an environment, an industry, an ecosystem, if you like, which is full of scammers, opportunists, sharks that are looking to defraud people out of their money. It's a system that is decentralized, so there's no central authority to trust or delegate trust to, or manage things for you. And many of the people you might turn to turn out to be the same scammers and opportunists who are trying to take your money. And all of these factors make it very, very difficult and very, very scary, especially for people who are not accustomed to change and have no reason to be accustomed to change. So, Bjorn, the simple answer is, it is scary, and you can't change that, and you shouldn't really try to change that, because the bottom line is, at the current level of maturity of this technology and the difficulty in using it and the difficulty in using it securely, the people who use it are the people who need to use it, or the people willing to take very, very big risks. And sometimes those risks are rewarded, and that's part of the game. But also mostly people who see the opposite risk as being even greater. And the opposite risk is being prey to the traditional financial system, where you are subject to oppression, confiscation, inflation, theft by oppressive governments and corrupt banks. So if that's not the case in your environment, do you really need to deal with scary crypto? Maybe not yet. Maybe not yet. So I think it's important to acknowledge that crypto is scary, that Bitcoin is scary, and that's okay. We're not trying to persuade anyone to use it who doesn't need to use it at the moment. It's much more interesting if you can develop skills in this space and gradually learn how to use it, if that gives you some kind of benefit. All right, this is a very good point for us to take a brief pause, and gives me an opportunity to thank the community builders on Patreon who make it possible for me to do this work, to do it at a high level of quality, to provide it free and ad-free for everyone in the world to watch, and to make it open to the public to participate. So let me get started, because I have a lot of people to thank, and I'm going to try and do this as best I can. All right, and here we go. I would like to thank my community builders who contribute every month without fail. Enrico, Cosmatos, Vincent Durrani, Alexander Badiman, Andrew Creamer, Andrew Vieira, Anita Posh, Billy Gonad, Burst Up, Carlos Chaintuts, Charlie J, David Frier, David Maddock, David Orban, David Stansel, DB Star, Ed Posnack, Elias E, Frank M, Gasper Rashek, Grigory Tikhonov, Karen and Joy Ishihara, KBM, Marcel Smeets, Marin, Matt Briz, Matthew Hansen, Meredith, Mike Riddle, and our second page. More people to thank. I'm so blessed. Miloslav Janusek, Mimble, Narayana, Niraj Badaya, Neverlands, Nicholas Botos, Pablo Navarro, Pepe, Pierre Schweitzer, Rafal Sislak, Remco Duma, Richard Taylor, Sam Samskis, Santiago Gonzalez Taral, Sebastian Perez, Sedniper, Sven Sommer, T. Budiman, Technospherics, Ty Jerix, Tim Wright, Tomer, V45370, Yes to Crypto, and one person who asked me to thank them by saying and reminding people that Bitcoin is money of the people, by the people, for the people. That was a lot of words, and I probably butchered some of those names, but it doesn't change how grateful I am for all of your support. So thank you again for sticking with me, especially when I know that many of you are dealing with a difficult financial situation, but you're still supporting me and helping me achieve this mission, which is to educate as many people as possible about Bitcoin and open blockchain in as many languages as possible for free. Let's see. Anonymous asks, hey Anonymous, good to see you again. Hi Andreas, Ethereum is in competition with so many other second or third generation cryptocurrencies. Why did you call your book Mastering Ethereum, not Mastering Smart Contracts? For the same reason that I called my first book Mastering Bitcoin and not Mastering Blockchain. The bottom line is this. Many people will claim to have invented the next Bitcoin, and have, in fact, continuously for 5 years. And in much the same way, many people claim to have invented the next Ethereum. And for both of those cases, I honestly do believe that once you have a solution that is good enough, that occupies a very specific and focused niche, it doesn't really allow too much competition in that specific niche. So other projects have to either differentiate to the point where they're no longer competing for the same niche, or they fail to differentiate. They are competing for the same niche and they lose that competition because they don't have to be better. They have to be much better to displace the network effect, early adoption, developer base, branding recognition that is built up by a project that occupied that niche first. And that applies the same in Bitcoin, where people have said there's better money and faster blockchains and more scalable systems, etc., as it does with Ethereum, where when in the early days, people who were very, very eager to promote Ethereum kept saying, this is going to kill Bitcoin, we're coming for you. And the irony, which I pointed out early on, was be careful what you wish for, because before long, people are going to come along and they're going to say, well, I'm kind of interested in smart contracts, the technology behind Ethereum. Just like they said, I'm interested in blockchain, the technology behind Bitcoin. And what I've built is a better Bitcoin. What I've built is a better Ethereum. And that's exactly what happened. And for the same reasons that it didn't work for Bitcoin, I don't think it will work against Ethereum either. That doesn't mean that either of those systems can't fail. They can. But in terms of recognizing the early advantage and the pioneering role of these technologies, I think it's important to name them in the title of my book. Now, that doesn't mean that Mastering Ethereum is only about Ethereum. It's actually absolutely applicable to every other virtual machine system, such as Rootstock and Ethereum Classic and many other virtual machine smart contract systems. The same ideas apply, very much so, and many of the chapters are applicable. So, yeah, that's why I named it what I named it. Anonymous, again, asks, what do you think about Cosmos and the Internet of Blockchains? Is this just a gimmick or another important innovation? Thanks. It could be both. It's very difficult to tell at this early stage how this is going to play out. So I'm not going to comment on Cosmos because I don't know enough about Cosmos other than the overall idea of creating an interledger or Internet of Blockchains platform that connects blockchains together. And I know that there are a number of efforts along that particular avenue, such as Polkadot and others. So let's talk about the Internet of Blockchains. Is that a gimmick? No, I don't think so. In fact, I think that we will see integration projects that attempt to bridge the gap between multiple blockchains, at first using very simplistic atomic swaps and various forms of decentralized exchanges, eventually trying to connect different layer 2 networks to each other. So, for example, connecting Lightning to Plasma to other things like that, and connecting to decentralized exchanges. Eventually, as these projects consolidate, fragment, we will reach a time where there will be an emergent protocol that offers interoperability in connecting layer 2, and that would be layer 3. And when that happens, that's likely to be a protocol that allows many blockchains to work together and people to be able to move funds, smart contracts, state between different blockchains in a very, very fluid manner. We saw that happen on the internet. And so while it's impossible to completely hide what blockchain you're running underneath, and you shouldn't anyway, just like it's impossible on the internet to hide the fact that you are on a fiber optic local area network versus a Wi-Fi local area network versus a satellite wide area network connection, but all can kind of work together over the internet protocol. I think we will see a future where we will have an internet of blockchains, an interledger protocol, or whatever else you want to call it. I think that's an inevitable direction we're going in. That's not a gimmick. Now, keep in mind, just because we're going in that direction doesn't mean we arrive there anytime soon. It might take a decade. It might take 2 decades before we get to a point where interoperability, standardization are desired features, and the impetus to build these overcomes the difficulty of building these things. For the internet, it took a very long time to get to IP, and there were many computer protocols connecting computers on a local basis before that happened. So, and then it took many years for that to become popular. So I don't think it's a gimmick, but it might be a very long time. David asks, hi Andreas, could you recommend how to best set up a private public key messaging system so that you can send verifiable messages in the case of social media hacks. What do you mean, David? Social media hacks? When do those kinds of things happen? I mean, imagine the horror. Someone might hack an important social media platform like Twitter and hijack people's accounts and send messages when it's not them. Oh no. Yeah, I'm still a bit bitter about that. And it was a very harrowing 48 hours while I was disconnected from Twitter. Or should I say, in typical British fashion, Twitter was disconnected from me. Anyway, yes. How do you set up private public key messaging systems so you can authenticate? This is a very, very difficult problem, David. And it's not a problem of setting up the actual cryptography. That's easy. And it's been solved many, many times over. We have PGP and nobody uses it. Although I did use it to verify who I was on Twitter, most people couldn't verify the message I signed, and even fewer people could verify that the key I signed with actually belonged to me. And those are the two fundamental problems. The first one is the user interface. These things need to be very, very easy to use so they can gain broad adoption, and we haven't really cracked that problem yet. The second is building a link to an identity system that is decentralized. And that is almost the holy grail, both of blockchains and cryptographic systems, which is successfully tying it to a real-world identity in a way that doesn't require a centralized actor with enormous power and easily corruptible, of course, or doesn't require very, very complex dance, things like Web of Trust that you may have heard of, where we go around and have key signing parties. I participated in key signing parties in 1995 with PGP, which is about as early as you can ever do that. And I was very excited about that new technology. Never took off. Never gonna take off, for all of the above reasons. So the difficulty is not how do you set up the private public key messaging system? Download PGP. Great. And then what? And then actually implementing that at scale and tying it to identity is very, very difficult. There's a couple of projects that have tried to do that. Keybase is probably the most famous in the crypto space because they replace a web of trust with a web of social media accounts, which in some ways is better, in other ways is worse. But again, outside of the crypto space and the very narrow user base of Keybase, how many people know what that is or can use it successfully? I think we're still a long way from that being a reality, which is a pity because I'd love to see it. All right, here's a juicy one. Viktor, thank you for this one. Viktor, what new use cases does dynamic commitments for Lightning channels enable? Thank you. Thank you for throwing that at me. I was thirsty for a nice, juicy technical question. So what Viktor is referring to here is a concept that Olalu Oshitokun, the CTO of Lightning Labs, posted on the Lightning developers mailing list last week. Where he described a very interesting upgrade mechanism called dynamic commitments. And this is for doing upgrades of existing Lightning channels without having to close them. The idea is relatively basic, but it's an insight that honestly I hadn't really considered. Which becomes obvious in retrospect, and that's usually the hallmark of a genius idea. We're like, oh my, how could I not have thought of that? And what it recognizes is that when you have a Lightning channel, a payment channel in general, established with another party on the Lightning network or any layer 2 network, the only two parts of that are actually recorded in the blockchain are the funding transaction, the initial funding transaction, and the final closing transaction. Once you've opened a channel and the funding transaction has been confirmed on say, the Bitcoin blockchain, you have a series of commitment transactions that you use to manage the state of the channel, but these are never published unless you have to do a forced closure. So you hold them, and your channel partner holds them, but nobody else knows about these. They're just between you and your channel partner. So here's the idea. What about changing the mechanism by which the channel is operated, the state of the channel is progressed, the balance is allocated, the mechanism that binds to the funding transaction, all of these things? How about upgrading those things without closing the channel? And the insight here is that since the funding UTXO is the only thing that's actually anchored to the blockchain, you can go in and negotiate between the two channel partners and say, listen, the next commitment transaction we're going to sign is going to use a different mechanism. It's going to use a different mechanism for revocation keys. Maybe it's going to use a different mechanism for the penalty. It's going to use a different script type so we can change the script slightly. Maybe it's going to use Schnorr signatures. Maybe it's going to use L2 rebinding, if we can do that. So because you are negotiating these commitment transactions with your channel partner, and you don't need to tell anybody about them, you can basically dynamically upgrade the channel by agreeing on a new set of commitment transactions that accurately reflect the current state without closing and reopening the channel, which is very difficult to do because you would incur on-chain fees. This is brilliant. This is almost the soft fork equivalent of the Lightning Network. It allows you to do a backwards compatible and forwards compatible change to the Lightning scripts, the smart contracts that run the payment channels, without having to shut down and restart. Now, if you think about it from a bigger perspective, currently on the Lightning Network, there are some 10 or 11,000 open channels. In order to upgrade all of those to a new script mechanism or a new type of signature or something like that, until we had dynamic commitments, the idea was you would have to close 11,000 channels. Closing 11,000 channels means dumping over some period of time 11,000, minimum 11,000 transactions onto the Bitcoin blockchain, and then to reopen them another 11,000 transactions. And that's a mess. So the ability to do that dynamically without closing channels is a huge idea. This doesn't exist yet. At the moment, it's basically like a BIP. It's a proposal. But the proposal is fleshed out enough that there don't seem to be any reasons why we can't do this. And it sparked a very, very interesting set of conversations. So very excited about that. Anonymous asks, high gas prices seem to be the norm now on Ethereum. Does this kill innovation for non-DeFi projects, and how can this be fixed? Yes, it's a problem, but it's not an unsolvable problem, and it can be fixed probably in exactly the same two ways, maybe three ways that it could be fixed in Bitcoin. So how do we fix high fees in Bitcoin? Three ways. Increase the underlying block size, which creates problems with decentralization elsewhere. Implement various forms of sidechains, or implement a layer 2 technology, which is effectively a sidechain per payment channel kind of idea, where you have a framework for creating lots of sidechains, which are payment channels. And Ethereum can do all three of these. But again, Ethereum already has a much, much bigger blockchain because it's recording a lot more information in order to keep state of smart contracts and record the data that these smart contracts rely on. So it already has a bigger problem than Bitcoin in terms of the growth, the accelerated growth of the underlying blockchain. So how is this fixed? Well, the first fix is with the introduction of Ethereum 2.0, we have a concept called sharding. And what sharding does is essentially it partitions the blockchain into a number of, let's call them sidechains or shards that contain a subset of the data and then synchronize with each other. Then another way is to use layer 2 technologies. And layer 2 technologies such as Raiden and opportunistic rollup and ZK rollup are already deployed on Ethereum and will continue to grow to address this underlying problem. Now let's take a step back and look at this from a philosophical and strategic perspective. I don't want to say told you so, but I am going to say told you so. We've been having this conversation for a long time in Bitcoin. Back in 2014, 2015 already, this conversation about scaling and low fees had already started. And at that time, many people in the Ethereum space made two claims that proved to not age well. One of them was that this entire debate caused a lot of drama in Bitcoin and demonstrated how toxic the Bitcoin culture was. And the other claim was that Ethereum could do it better, cheaper, faster, and fees and block size was not going to be a problem for Ethereum. Both of those claims ended up being untrue. First of all, as soon as we had very serious issues to debate in the Ethereum space, some toxic attitude came out there too. And a lot of the early kumbaya feeling that existed in Bitcoin too, or also in 2012, 2013, everybody was kumbaya in Bitcoin, quickly disappeared in Ethereum also once you had significant controversy to debate. So now that we see that Ethereum also has to deal with these fundamental design decisions, these trilemma issues, security, decentralization, or cost, and balancing these three is difficult. So Ethereum is trying some different approaches to solve these problems, but the problems still exist. And here's the underlying lesson for all of the other chains that say, we can be cheap, we can be secure, and we can be decentralized all at once because of our latest Widgetorama 3000, which solves all of these problems through the application of magic quantum tangle chains, whatever. The bottom line is that these are not easy problems to solve. And when you solve them, but you don't solve them at significant scale, well, you didn't solve them. Never confuse calm seas for good sailors. You're a good sailor when you're a good sailor in rough seas. You're not a good sailor when you're sitting in the port laughing at the people in the storm and going, look at you people, you're all very wet. The bottom line is that both the difficult choices and the drama that happens as a result of tackling difficult choices are going to come to any chain that is lucky enough to become successful enough to matter. And all of those scaling issues will arrive. So the lesson from Ethereum is not really about Ethereum, because we'd already learned that with Bitcoin, and Ethereum, many people in Ethereum understood that this problem was coming. The lesson here is for many of the other systems that pretend that these problems are not there or won't happen to them, and they will. Interesting. Seem to be having some difficulty here with highlighting the next question. Let me see if I can... there we go. Anonymous asks, if we keep adding new opcodes to Bitcoin script, is it possible that Bitcoin becomes Turing complete, or at least more general purpose than before? Asks Anonymous. Yes, is the simple answer. It is possible by adding certain types of new operations into Bitcoin script that it could become Turing complete. If you add operations that allow you to do things that are in their nature recursive, that allows you to do loops, which makes the script Turing complete almost immediately. So Turing completeness is not a desirable characteristic. In fact, quite the opposite. It's actually hard to ensure that a language does not become accidentally Turing complete. You don't achieve Turing completeness, you stumble into it by accident. And in fact, there's a whole interesting website about this called Accidentally Turing Complete, where we find all kinds of languages that are not supposed to be Turing complete, but in fact are, including PostScript, the PDF language, HTML, and CSS, which were never intended to be Turing complete, but somehow stumbled into it. And it's a much bigger list than that. So remaining Turing incomplete, which provides many, many security and provability characteristics for Bitcoin script, is difficult. And so that's why this is an ongoing debate and discussion when we talk about new operations that might be added to Bitcoin script. People think very carefully about how those might be used to create something that might be Turing complete if it's used in a very, very specific way. And that would not necessarily be good. It creates a variety of other problems, including, of course, the famous halting problem, which is that as a means of denial of service, it's possible to run something that runs forever. And if you do that in that's not the definition of the halting problem. Yes, I know that. I'm simplifying it as much as possible. But basically, when you have a Turing-complete language and you have loops, you can create programs that run forever. And where you can't predict how long the program will run, and that creates an avenue for denial of service, where imagine, for example, if validating a Bitcoin script, which effectively forces you to run it, could be engineered in such a way that the validation itself took forever. We've seen this happen in Ethereum. Not quite forever, but certainly denial of service attacks that were very, very damaging to Ethereum and required hard forks to fix. So is it possible? Yes. Is everybody aware that it is possible and trying to make sure it doesn't happen in Bitcoin? Yes, absolutely. All right, a slight change of pace. Let's do a quick economics question. Andrew asks, if Bitcoin is a store of value, why did it lose rather than gain value when markets crashed due to COVID-19? And why is its value only now starting to climb? Andrew, that's because Bitcoin isn't only a store of value. It has store of value characteristics. It also acts as a speculative asset for a lot of people. And how people see it and treat it determines how it behaves. So if you have the majority of the people who are invested in Bitcoin, invested not because they see it as a long-term store of value, but because they see it as a speculative investment, which is a relatively high-risk investment that will add some spice to their portfolio and send them to the moon, then Bitcoin will behave that way. And that will mean significant volatility, but it will also mean that Bitcoin responds to market sentiment more than monetary fundamentals. And that's exactly what happened. Don't forget that a lot of the people who are investing in Bitcoin as a speculative asset are doing so with disposable income, or they're doing so on the basis of leverage, basically margin trading, that they do by virtue of having very, very low interest rates that are created by enormous amounts of stimulus. What that ends up doing is it ends up correlating Bitcoin to the one factor that is the only thing driving most markets nowadays, and that's the Fed put. Basically, cheap money makes market go up. And that also means that cheap money from the Fed sloshing around in markets that don't have yield eventually sloshes onto the shores of Bitcoin as an area where desperate investors are trying to find yield, and that drives Bitcoin price. So number go up in Bitcoin also because Fed interest go down, to use the meme. The bottom line is that Bitcoin is not immune to brrr from the Fed. They print money, they inject that money as a cantillon effect into the investor class. That investor class has extra disposable income. That disposable income can't be used to invest in things that generate yield because nothing's generating yield because everything's responding to the Fed. So eventually they switch to investing in riskier and riskier assets, and guess what? Here's this Bitcoin thing that sometimes is counter-correlated, most of the time is uncorrelated, and they pile money in to that, and guess what? That makes it correlated. And so that's exactly what happened with the COVID-19 crisis, which, by the way, don't want to say I told you so, but I kind of called it a couple months before it happened. When people were saying, will an economic recession make Bitcoin go up? The answer is really simple. At first, no, it will make it go down. And I'm going to make another call. We're going to see that happen again. I think that over the next couple of months, at least the US economy is going to go off a cliff. The basic aspects of stimulus that are helping the lower and middle class to cling on desperately while they lose their jobs are being withdrawn. Instead, we're funding, absolute necessities like $740 billion into the Defense Department to bomb more people around the world. So as a result, when these stimulative measures diminish, I think the US economy is going to fall off a cliff, basically. And the impact is going to be very, very dramatic. It's going to be a demand collapse. You can tell consumers to go out and buy shit all day long, and if they don't have any money, they're not gonna. And the bottom line is, when you see that kind of economic hit coming, it's going to hit Bitcoin too. In fact, it's going to hit the entire crypto market. Now, in the medium or long term, it's also going to cause a massive flight of capital. And as various governments try to stem that flight of capital and keep it contained in fiat, and crypto becomes a safe haven that cannot be contained, a lot of that flight of capital is going to end up in crypto more than before. And I think it's probably going to mean that we're going to see the price decorrelate from the broader economy as it acts as a safe haven. But this is impossible to predict. Both the timing and the magnitude are impossible to predict. In the meantime, understand that store value is one perspective, and it's a long-term perspective. And that doesn't mean that these things will not behave like very, very speculative, high-risk investments in the short term, which means you need to be very, very careful how you handle your money and how you diversify your investments. I think that's the last question. We've gone 58 minutes. We'll wrap it up here. I wanted to say thank you so much to everyone who joined. I can't see how many people are on. Let me try and read this tiny, tiny font. 402. That's a really great turnout, and I can't thank you enough for spending your Saturday morning, afternoon, evening in order to hang out with me on this public live stream Q&A. I do these once a month, and you can always come and join and ask your questions or watch the answers I give to other people's questions. If you want to get a head start asking questions, that is one of the perks of being one of my community builders with a monthly support on Patreon. And you get a bit of a head start as well if you are a YouTube member and you have emoji. Next up, for our next Saturday, actually not next Saturday, but the next events we have scheduled at the moment are Ethereum Basics, which is a bonus live stream we're going to do. We did Bitcoin Basics and Beginners a couple of weeks ago, and now we're going to do an Ethereum Basics live stream in a few weeks. Look out for the announcement for that. Decentralized exchanges is another topic we're going to do as a bonus live stream. And again, these are going to be focused topics, which means that for these topics, we will only take questions on these topics. If you want to ask a question that's not about decentralized exchanges or not about Ethereum Basics, you have to wait until the next monthly live stream, which will be at the end of August. In the meantime, don't forget, subscribe to the channel, please, so that you can see all of the videos we're publishing, which is more than just the live streams. Turn on notifications. share, comment, and hopefully smash the like. Thank you to all of those who support me in doing this work, not just me, but my whole staff. It wouldn't be possible to do it without you. Thank you to my community builders. Have a wonderful weekend, everyone. Stay safe. Have fun. Take care.